and welcome to Business Incorporated, coming live to you from Lagos, the global headquarters of Channels Television. Wherever you're watching us on Planet Earth, we thank you for joining us at this time. I am Bosin Amafai. Coming up in the next 30 minutes, the head of the International Monetary Fund, Christine Lagarde, today begins a tour of the Central African Republic, Uganda, and Mauritius. Meantime, officials at major ports in Libya's eastern oil ports are hopeful foreign workers will soon return to help build the gains on current output. Meantime, Real Dutch Shell's operations in Gabon now up and running after striking an agreement with the staff, the labor union, and the government. But of course, the story everyone is talking about is Nigeria's central bank interest rate setting monetary policy committee communicate that will be out within the hour. It's 1:30 p.m. or in the afternoon here in Lagos, Nigeria. Within the hour, we expect the governor of the central bank, Godwin Emefiele, to brief the press. That event will be live in 30 minutes. We'll open up the studio with our panel of discussants to take a pre-look at what the decisions or the considerations of the MPC 11 member will be. Then we will have a live coverage from Abuja. Then, of course, the studio will continue to be live until 3:30. You don't want to miss that. Stick around. A very important decision day. The first monetary policy meeting and Godwin Emefiele's briefing in 2017. Now, let's get straight with the market. The Egyptian stock market sank about 1.01% intraday today, as showing non-Arab foreign investors who have been net buyers of the Egyptian pound was floated in 3rd of November, while now selling very small margin. You look at the rest of the continent, South African markets are really red hot today, 0.36% in the green, climbing well above the 12,800 level. The Nigerian market trading water as we speak about 0.10%. That has since gotten a little bit redder, adding to about 0.20%. Kenyan Stock Exchange, ACOUT 0.02% on Monday, 124.06 reading. Look at the Middle East market, where the Saudi Arabian stock market continue its rebound, crossing once again the 7,000 psychological level on the broad index. The index was trading higher, 1.22% intraday, this second trading day, but the third trading day of the week in Saudi Arabia, where the market started, of course, on Sunday. The Qatar Stock Exchange, 0.5% in the green. The Dubai Financial Market, also in green. The Abu Dhabi Market, 4,687 intraday, 0.47. All the major bosses within the GCC in the green this Tuesday. Let's move on to the European market, where all the major stock markets are also trading positive territory today. Investors wait for fresh economic data and earnings numbers. Already, the Eurozone Flash Composite PMI for January released this morning falls slightly to a 3-month low at 53.6 against 54 reading earlier. Also in the U.S., 3 automakers chief executives are meeting with the new President Donald Trump today. And don't forget, Mr. Trump has withdrawn from the Trans-Pacific Partnership deal called a TPP. Let's put some of this into some kind of perspectives with my colleague at the Frankfurt Stock Exchange, live to us at this point. Annette Westbach is there, DWTV for Channels Television. Good afternoon. It's good to see you again. Well, we thought we were going to let President Donald Trump be, but meantime, it looks like he's the rock star at the moment. He's the one having all the headlines, as it were. So he's meeting with the 3 largest automakers, GM, Ford, and Fiat Chrysler. It's this meeting keenly watched by European automakers like Mercedes-Benz in Germany, like BMW. What's the thinking there? Has anyone interested in what has been driven here?
Well, of course, for German car makers, the United States are the biggest markets, at least for most of them. For BMW, for sure. For Daimler, I think so as well. For Volkswagen, not so much, but still a very big market. Everybody is watching on what the Trump administration is going to do about import tariffs on cars. Of course, the mantra from Trump is quite clear. Invest in the United States, produce your cars in the United States, and then we are friends. If you don't do so, we are not friends. So what happens at the car makers inside currently is number crunching, how much they can take in terms of tariffs to make their product still competitive, and what they can actually envision in terms of higher prices. Most of the car makers do benefit from the NAFTA agreement, which means that they can produce in low-cost environments such as Mexico and import their cars into the States. If Donald Trump will really unravel the NAFTA agreement, that will be a major problem for those car makers.
Very interesting how things will work out. But again, it looks like the first to fall under the hammer is the TPP, isn't it? President Donald Trump dumped that overnight. So how's the market digesting this very major economic decision from the U.S.?
Well, actually, there's not a lot of reaction, I have to say, to the unilateral end of the TPP agreement from the United States. There, at the same time, are reports that Australia and the other nations involved in the TPP, all in all 11 without the States, still want to progress and still want to do the transatlantic trade agreement. So it would just be without the States. Of course, that's not as good as with them, but better than nothing, I think most of the people in Asia are thinking. I think the biggest problem coming from those protectionistic movements from the Trump administration is, as I was saying, the first answer, if he's really going to touch the NAFTA agreement, if he's really going to impose tariffs between Mexico and the States, between the United States and Canada, this is where it's going to hurt big time, also big corporations, because they've based their investment decisions for years now on that free trade area, the NAFTA free trade area.
Okay, and let's wrap it up with the, and I'm looking at the Eurozone PMI, Purchasing Managers Index, slipped slightly to 54.3 in January from 54.4 reading in December. So how are the big economies in Europe, how did they fare in this latest report? Germany, France, Italy, and the rest?
Well, actually, I have to say, even if it's a tad lower,